Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Chelsea Oliver. Welcome to today's morning call. We have mostly green arrows around the world as gains from this week have been able to hold. Europe the DAX is up about 0.5%, while Asia has held in pretty well. It looks like we're seeing some commitment to this recent rally here.
Yes, a lot of people thought that maybe it was just a rally to be sold, but like you said, commitment equals constructive type of moves. And Europe has been up, pretty much all week. So for the DAX to be up another 0.5% after being up, multiple percentage points this week, I think is giving a little bit of confidence to the bulls. And even last night, you had the G7 or yesterday, whatever it was, and out of Japan, Abe was talking about how economic conditions are very poor. But meanwhile, the world didn't care. Maybe he's trying to figure out a way to do more stimulus. But either way, it's been a risk-on type week, and we are seeing some commitment to it, and we'll see if that continues.
Oh. Yeah. S&P futures are flattish after a sizable move late last week and have had some follow through the past few sessions. What levels need to hold here in order to potentially reach all-time highs?
Yes, again, just like overseas, we need to hold here. And I'm sorry I didn't show the chart of the DAX like I usually do.
Yes, and I was waiting for the chart.
You know what? It's Thursday. We're heading into a long weekend. I figured, we'll speed it up for you. But I will show you the chart of the S&P because, if you look here at the long-term chart, you'll see every time we've come up to this spot, it's been resistance. Okay, here was last year's high. Actually, 2 years ago we were up here, and then the recent move came right up to this, what is this, 21.11. So it made some sense the first time when we backed off, right? Here was your double bottom, here was your holding higher, and then you had your trend all the way back to highs, and then right around here was when we started getting some earnings that didn't impress and weren't good enough to catapult us higher. But since then, the market corrected, gave some people time to buy. We held the 200-day, and then recently this week, we had a really nice trade when we took out this descending channel. So to answer your question, Chelsea, what needs to happen in order to potentially move above, resistance? I would think we need commitment again. So if we could just hang here and just say hold above this spot, okay, which yesterday's low is. So I would write down 2078. If we could hold here for a session or so, maybe today will be an inside day. Then I think that next move above this could take us back to the highs of the year. But I'd much rather see an inside day versus just getting above yesterday's high of 2094 because no one wants to feel like they're chasing a move. And from the red dog reversal we had here last Thursday, which was at 2034 to 2094, that's 60 handles or so. So today futures are flattish, and we'll see whether or not there's enough power to take out this high. Sometimes you take it out and you can get a little red dog reversal, or you stay within the candlestick. But we'll cross that bridge as we get there. But right now we're flattish, and you want to write down 2094 because if we go above that, maybe that 2100 becomes a magnet ahead of Janet Yellen's speech tomorrow, which will be around 2:30.
There's a lot of participation amongst various sectors. Can you go ahead and give us a quick look of that landscape across the board?
And you need that participation. Like if we're going to get the S&P above 2100, you need participation from tech, from the small caps, from the bios, from the banks, from the home builders. You name it, there has to be commitment there. So we are seeing a broader move. So I'm just going to run through some sectors, and I want you to just write down yesterday's low. Everyone's thinking this rally is going to fail. Well, it's going to be the theme. You can't get too bearish if we hold above this point. So if you get your paper and pen, let's go to the Qs first. Here you go. Here's the Qs. Basically, real nice move taking out the 200-day. Can't get too bearish if we hold above this spot. So the Qs low from yesterday is 108.68. I'd love to see the Qs hold above that and build, and then potentially see a move above yesterday's high. So either we're going to flag in here and continue, or maybe just continue. But again, we're extended from the moving averages, so an inside day would be nice, and you can't get too bearish if we hold above this 108.68. If you go to the Russell, same kind of thing. Nice move, igniting move above these moving averages. So this was really the juicy part of the trade. And now, can't get too bearish if the IWM holds above this 113.08, and then with a little bit of time, maybe there's a little bit of a bull flag and it goes above, and then here is your highs of the year. Okay, then let's go to the XLF, which I think is very important. This was a focus of ours in the note this past week, talking about how we wanted to see commitment to last Wednesday's hawkish statements. Well, this was your commitment. Okay, held in there and took off. We're now above the prior high of the year. So same thing here. Can't get too bearish if we hold above 2363. So let's see if we could hold above that digest, and then at some point take that out, and then you almost even have to go a little bit more longer term to see if we can get towards 2450. So lots of nice looking patterns. This actually, as I look at it, looks a little bit like a nice little cup and handle pattern where it's just cleared the handle. And if that's the case, from 20 to 2350, that takes you north of last year's highs, which would be pretty constructive considering that the banks are acting pretty well.
It's been pretty impressive that oil continues to hold higher and it's flirting close to 50. Do you think that the market would like to see it get over and close above it?
A lot of people are saying that 50 plus tells you that the world economy is doing better, and that's the barometer. If that's the case, maybe that does breed some confidence that this isn't just a move because of lack of positioning, or this isn't a move just because of sentiments being poor, or there's a lot of people short. But you've had a big move from 25 to 50, so the media likes to celebrate headlines, and 50 is really not that big of a deal. It's no different between 48 or 51. It's just something to measure. If you look here at the USO, the better thing to measure was this trend. The trend here off the lows, intact here. The trend here for the accelerated trend, also intact. We talk about when you're above the 8 and 21 day, you want to be long, and this has been above the 8 and 21 day pretty much since April. So now the question is, kind of hit the 200 day and continue. It seems like there's room there. Look where this thing came from. I want to show you also trends. Look what happened here when it broke below the 8 and 21 day. It was downtrending below all them the entire time. And then right here, when it got reclaimed, okay, this is when you switch some gears. First move here, came back in, gapped up, held it, and pretty much since about 980, this has been trending above the 8 and 21 day if you're a swing trader. And let's take a look at the XLE. Unfortunately, I sold mine yesterday, but all in all, the XLE looks pretty good. Okay, this trend off the low is still intact, above the 8 and 21 day, and has some room to get towards the highs of the year. And if you want to just learn a lesson here too, look how it was here, below the 8 and 21 day this entire time, and giving you no really reason to own it. And now this time, it's been above. So above the 8 and 21 day, you try and be long. Below the 8 and 21 day, you try and be out of the way. And now we'll see whether or not this sector continues to provide a tailwind versus a headwind like it did the past 2 years.
Stocks have been on the move with all different types of setups. Scott, does it concern you that Facebook and Amazon have lacked some power?
It concerns me a little, but it really concerns my pocketbook a little bit more because I focused on what I thought were the two strongest stocks, and during this rally, they've been up, but they've lacked power. So maybe it comes back, maybe it doesn't. So I'm trying to be a little bit more careful there. If you look here at Facebook, still Facebook best in breed. It held the gap right here. Okay, it's above the 8 and 21 day moving average. It's just not powering up to highs. Maybe people aren't in a rush to own it yet, but all in all, looks pretty good. Okay, and I would say at this point, if you're taking it day by day, make sure it holds this spot. If it holds this, 1738, maybe it tries to clear yesterday's high, and then all of a sudden you're back towards 121. But all in all, not concerning. It's just looks like it's not ready. Same thing with Amazon. Amazon also, if you look at where it is, it's just very over-owned, and there's not a lot of people short it because it's been a leader. So with that being said, you look here, it's still above the prior high and the earnings gap, and it kind of poked its head above this little flag, but didn't have power. So I would say if you're still long it, maybe just be long it versus 705.25. So that's what I would say right down. There's not a really clear-cut setup here, except for if you're in it because it's trending, stay in it as long as it stays above this 705, and then if it happens to get some power, it'll take out yesterday's high, and then all of a sudden you're back to highs of the year. So it's not concerning. It just hasn't really been where the action has been, or the fast action at least, over the course of the past few sessions.
Right. And on the flip side, we have names that missed earnings and are now starting to trade into those earning gaps. I know Kramer talked pretty positive about Netflix last night. Do you think that opened theirs for buying or selling?
He always does it after a move. We talked about Netflix when it was at 93.50, breaking the downtrend. Now he's pumping it up above 100. So I do not think that Netflix should be bought by you guys up $2 pre-market. If you look here at the chart, we talked about buying this here, okay, when it cleared this lower area, when it cleared this lower trend line. Okay, this was buy number 1, this was buy number 2. You could rewind and watch the morning call. Here's when it reclaimed the 8 and 21 days. So now 1, 2, 3, 4. So he's pumping in now in the 5th up day. I don't think you should be a buyer of that. Okay, well here is the post earnings gap. I would think that you're probably getting some short squeezed here. Above 101.37. It could be filled all the way up to here. So I'm not saying it's an easy short, but maybe in the first 30 minutes it puts in a high and then you see a divergence, maybe try and short versus that high. And I think you might get a cute short here because usually he's the last guy doing it. So anyway, I would not be looking to initiate a new position here up $2. But if you're looking to fade it, just make sure you do with the plan. I think a lot of people might have started fading it here and now they're on the ropes. Another stock that has been acting pretty well that missed earnings and seems like it's you look at the channel here, you see how it had a sideways channel and got hurt after earnings because it was set up for highs, which was right there. Well, now it looks like it's trying to get into that earnings gap. Here was the descending channel. This was your day 1. Here's your sort of day 2, and if the market wants to continue, this could be a decent trade above this 740 to then figure out if it wants to get into its earnings gap. It seems like a lot of these are like playing who's next to get into the earnings gap, and Google could be on the radar for that too.
In mega cap land, Apple is in its post-earnings gap. What is your strategy there?
It's kind of the same. I'm not chasing it long, but I'm being very meticulous where I'm not looking to just short it because people who've been just trying to short it, are not having success. And it seems as if this earnings gap is a magnet. So there's quick trades there for those who are trying to be long. But again, when it kind of turns with that pivot, you want to make sure you're not the last one standing up with the music off. So you look here at Apple, you'll see that this was your time to switch gears. Remember, it had that false breakdown below 92. Then this is when Buffett came out with his stake, and that was your at least cover. And then what do we do here? We reclaim the 8-day moving average, which put it back in tactical long mode. And now it's already, this was one of the first to get into that post-earnings gap. And it's a big one. So with that being said, sometimes, with Apple, if it's strong in the first part of the week, everyone gets excited and they start selling calls like the 100s, 101s. So maybe, today's a day where they pull it in a little bit so the option guys could keep that premium. So with that being said, write down this pivot. The pivot here is 99.74. Maybe you get a red dog reversal here where it pushes above it and then runs out of gas, comes back below it, and then finally it lets the moving averages catch up. But we shall see. If it wants to see 102, it could do that too. So for Apple, I'm not looking to be long it, but if I'm going to short it, I'm only going to short it versus a level if I see a divergence. And let me just show you one more in mega cap land. Let me just show you Microsoft. Microsoft also, just like Google, just like Netflix, has been a magnet to get back to the post-earnings gap. And right now, it kind of got rejected right there. So I would say if Microsoft could hold above 51.79 and you trade Microsoft, the next move could be a better one into that gap.
Tesla has been consolidating ever since it announced its secondary about a week ago. Do you think that this will be a focus of yours if it can take out the 200-day with force?
It is. For some reason, my little Tesla voice is telling me, watch Tesla, it looks like it's ready for a move soon. The secondary, like you said, happened over a week ago. So anyone who got that stock at 215, they've had some time to sell it up $5, getting their free lunch. And then anyone who was short thinking it's going to fall apart might be getting a little antsy. You also had a few short reports and it didn't go out. If you look at the chart of Tesla, I remember right around here is when, here was your V bottom. Okay, and right around here is when Citron came out with the report. Okay, and I remember being, let's see if they have any power, and people got caught short, and then boom, it created a run all the way up to the highs. Then I guess word came out that they were going to have a secondary because of the huge, what's it called? Not invitations, whatever they did with the next car, the reservations, yes. So anyway, with that being said, you have a little mid-level bull flag here. Okay, the 200-day right in front. So for me, I'm thinking that if it can get above this 221, 222 with some force and some volume, and we're in a decent market, you could see a move back towards 230. I don't know if it happens today, but I'm going to be watching it today. I actually nibbled a little bit pre-market for some reason. I'm feeling a little antsy. Hopefully, being antsy, it doesn't hurt. But this is probably one of my focuses on the day if volume comes in.
Dollar Tree reported strong earnings. How does that macro chart look to you, and do you think that there's potential opportunities there today?
Well, retail has been hit or miss, and to have a good earnings report by one of these major chains could be also helpful for the overall market. You look here at the chart of Dollar Tree, and look at the size of this this resistance level here. So in order, just like a tech stock, in order for it to get up and go, okay, it's going to need to get above this 83 and hold. So see what happens here. See if it has a big gap up, holds, and then keep it on the radar. Remember we talked about CRM. Had a big gap up, okay, held, and then all of a sudden after a few days took this out and became a nice little trade. So you want to see big gap ups, hold, and then continuation. Remember what happened with NVDA? I don't think it's going to happen with Dollar Tree. I'm just saying, look at the size of this gap up and how that went. Wow. Very extended. As we have NVIDIA up here, we might as well take a look that I would not be buying NVIDIA here. And if maybe it gets below yesterday's low, it comes in a little bit. But it's, again, good to see that this type of strategy works, where you have a big gap up, you write down the post-earnings high, it takes it out, you get long. And if you did, you got rewarded.
Last week, the metals and the miners broke upper momentum support zones. Scott, I know that you said to actually look out for bigger support for a balance, which helped out some traders. What is next?
Well, when you sell, when sectors or stocks break the 8 and 21 day, you then have the opportunity to look at them lower. And when the Fed came out with their hawkish minutes, the GLD broke its upper pennant, and it was time to get out of the way. It lost momentum. Didn't mean it broke, but it lost upper momentum. So if you sold it there yesterday, you had the opportunity in that down move to buy the dip. You look here at the GLD, you'll see that this is what I was talking about. This is when it broke this upper spot right here. Okay, and if you sold here yesterday as it came into channel support, it was worth a look, and it wound up holding, and it's up a little bit. I don't think it's going to be a blockbuster move, but maybe the GLD tries to bounce back to here. If you long it overnight, maybe trim a little bit. GDX had a better move. A lot of guys looked at it yesterday. You had your red dog reversal. Same thing here. It broke the 8 and 21 day, and if you got out there yesterday, it gave you a nice red dog reversal around this pivot, which was 22.44, closed well. And if you took a third overnight, you're getting a little paid. But I would be careful, not adding into this, because the moving averages are curling down. So treat it as a day and a half move, and day and a half moves, are typically what could pay your bills. So at this point, I think that you take that off. But it was, again, if you have these set of rules where you get out when upper momentum leaves, you could always buy back. If you're short up there, you could cover lower. It's just a way to navigate if you're very active.
Right, and now I know we're near the end of the week and we have a long Memorial Day weekend coming up. Are there any more closing thoughts?
I think people want to figure out how they want to position, because historically next week's not a great week, especially considering the size of the move that we had. And you also have Janet Yellen speaking tomorrow, and people want to see if she's going to confirm some of the hawkish comments that we've seen from other Fed officials. So, after a big move like we've seen, into a long weekend, I would say just be light. Don't try and make your week today or tomorrow. Or don't look to have too much on where you're worrying about it all weekend. What you really want to do is you want to relax. You want to have fun with your family. You said, what are you doing? You're going to Cape Cod?
Yes.
Right. What goes on in Cape Cod?
Weekend. I'll find out.
Oh, you never been there?
No,
okay.
I haven't been.
Well, cool. I've heard good things about it. And if you're going away, you're going to the beach, you're going to the mountains, the last thing you want to do is have too much risk on, whether it's long or short, where it's taking you away from, the situation in front of you when you're supposed to be, clearing up your mindset so you can come back and have a good June. But again, let's go just say to the spiders, show you one last chart before we end here. Here is this move above this resistance right here. I would say, holding above this 208.50 to me would be very constructive for then a move back to highs. We talked about at least covering shorts and trying to get long when this descending channel broke. You've had lots of little ways to participate. One, here was your red dog reversal. Two, took out this micro support, and then yesterday got some follow through. So today, what I'd like to see is an inside day. And if someone put a gun to my head and said, what happens by the weekend? I think we get a close above 2100. It's just a matter of how it happens over the next session or so. So at this point, a little extended, maybe an inside day. Here's support. You know where your pivot resistance is, and this is your highs of the year.
Great. Thank you, Scott. Have a great trading day, everyone, and a great weekend.